with this past week in crypto, huh? Talk about a roller coaster. I mean, seriously, from March 10th to the 16th, it was like every day brought some crazy new price swing, regulatory bombshell, or some tech thing I barely understand. It was a lot.
I hear ya. It was definitely one of those weeks where, it really showed just how intertwined everything is in this space. You've got the overall market sentiment, then you've got the regulations, and then you've got the actual tech itself all kind of pushing and pulling on each other. Sometimes it works out, sometimes, well, not so much.
Exactly. And that's why we're here, right, Sha? We've got the latest weekly crypto market report in front of us, and we're going to break it all down for you. No jargon, no confusing charts, just the essential insights and the why behind all the crazy headlines so you can walk away feeling like, okay, I get it now, instead of my head is spinning.
Absolutely, that's the goal. We're going to untangle it all.
All right, so let's get right into it, starting with everyone's favorite, Bitcoin. And what a week it was for Bitcoin, am I right?
It started off around 80,000 bucks, then bam, out of nowhere, it takes this nosedive, ends up below 77,000, which, by the way, was a 4-month low for Bitcoin. But then, like a phoenix rising from the ashes, it climbs back up to around 83,000 by the time the week was over. It's a gain of about 5.5%. But, I mean, seriously, what a wild ride. What do you think was behind that initial drop? It seemed to happen pretty suddenly.
It's really interesting because when you look closely at what happened around March 11th, it seems like there were a bunch of anxieties that all kind of hit at the same time. You had the stock market getting all jittery, people starting to worry about another recession, which always spooks investors. And then to top it all off, you had a massive amount of liquidations happening in the crypto market. We're talking $317.95 million gone just like that. That's a ton of leveraged bets that went completely south. And if you zoom out even further, there was a lot of talk, particularly online, linking this whole downturn to, some of the bigger economic uncertainties and even specific policies that were being floated around. When people start to feel uncertain about the future, crypto, unfortunately, is one of the first things to take a hit.
It's like a domino effect, right? One thing gets shaky and it ripples through the whole system. But then, almost as suddenly as it crashed, Bitcoin bounced back midweek. What do you think was the catalyst for that recovery?
Well, this is where things get really interesting. We saw not one, but two pieces of really positive news that I think really helped turn things around. First, on March 12th, the EU approved its very first Bitcoin ETF.
A Bitcoin ETF, that's a big deal, right?
Oh, yes, huge. Think of it as a way for more traditional investors, people who are maybe a little hesitant to dive into the world of crypto exchanges and wallets, to invest in Bitcoin. It opens up a much more familiar, regulated path. Then, just a couple of days later, we get this court ruling in the U.S. that goes in favor of a crypto firm that was battling it out with the SEC. Both of those pieces of news, I think, really pumped up confidence in the market. The EU ETF approval, it shows that mainstream financial institutions are starting to take Bitcoin seriously. And the court ruling in the U.S., well, it maybe hints that things might be loosening up a bit on the regulatory front.
That makes total sense. Good news on the regulatory side is always a good sign for crypto. Now, Ethereum, on the other hand, had how should we put it? A bit rougher of a week, right?
Definitely a bit rougher.
So Ethereum started off around $2,487. Then on March 11th, it plunged all the way down to $1,893.45. It did recover somewhat, finishing the week around 2015, but that still puts it at a net loss of about 19%. Ouch. Why do you think Ethereum struggled so much compared to Bitcoin?
Well, that's the million-dollar question, isn't it? And I think it really underscores how different these two cryptocurrencies are, even though they often move in a similar direction. While both Bitcoin and Ethereum took a hit during that initial downturn, Ethereum just didn't seem to have the same kind of strong positive news to help pull it back up. That drop on March 11th was brutal. We're talking an 8.36% drop in a single day, and reports showed almost $89 million flowing out of Ethereum investment products. That definitely adds fuel to the fire when everyone's already panicking. And just a quick note, because I know there are some numbers floating around out there about Ethereum falling even further, but the most reliable data I've seen puts that low point at 1,893.45. Still rough.
Yet no matter how you slice it, that's a big drop. And you mentioned that Ethereum didn't have the same positive news to help it recover, but didn't they launch that big scalability update everyone was talking about? That seemed like it should have been good news, right?
Oh, absolutely. The Ethereum scalability update, which, by the way, is super important because it's supposed to make transactions faster and cheaper, and that's crucial for Ethereum's future, did go live on March 11th, the same day as that big crash. Unfortunately, the timing just couldn't have been worse. It was like trying to throw a party in the middle of a hurricane no one even noticed.
Talking about bad timing.
It really was. And to add insult to injury, we also saw reports that BlackRock, the investment giant, was selling off a chunk of their Ethereum, holding something like $11 million worth. So, that didn't help stabilize the price either. So, long story short, the update is definitely good news for Ethereum in the long run, but it was completely overshadowed by all the craziness happening in the market.
Makes sense. Sometimes even good news just gets lost in the noise. Okay, let's talk about Solana now. It looks like they had a pretty tough week as well, right? Starting at 170 bucks, dropping down to 123.35 on March 11th, which was a pretty substantial 3.53% drop in a single day. It did climb back up a little bit to around a 126.78 by the 16th, but that's still down about 25% overall. What do you think was going on with Solana?
Solana really seemed to get hit from all sides this week. I mean, that initial drop, yeah, that was definitely tied to the overall market sell-off, just like we saw with Bitcoin and Ethereum. But Solana also had some other stuff going on, some baggage it was already carrying. Reports from the week before were already showing that Solana was down almost 10%, so there was definitely some bearish momentum building even before this week kicked off. On top of that, there are still concerns about network congestion, something that's plagued Solana in the past. And then, just to make things worse, a new meme coin scam popped up that really didn't do Solana any favors.
A meme coin scam. Oof, that never sounds good. What happened there?
So, towards the end of the week, news starts circulating about this new meme coin that was launched on Solana by a guy named Hayden Davis. Now, if that name sounds familiar, it's because he was involved in the whole Libra token debacle a while back. This new meme coin, get this, had 80% of its supply allocated to insiders. You don't need a PhD in economics to see that something's fishy there.
Yeah, that's a huge red flag.
Oh, absolutely. And you know what that means. People start worrying about manipulation, rug pulls, the whole 9 yards. The creators pump up the price, then vanish with everyone's money. And this kind of bad press, it hurts everyone in the Solana ecosystem. It definitely contributed to that big price drop, and it's reignited this whole debate about whether there needs to be more oversight within the Solana ecosystem to prevent this kind of stuff from happening.
Yeah, when scams like that happen, it really shakes people's confidence in the whole system.
Okay.
But despite all that negativity, was there anything positive that happened for Solana this week?
There were actually a couple of bright spots. One report showed that around $16 million flowed into Solana-based investment products, which is a pretty good sign that there's still institutional interest in Solana and its technology. And there was also a new DeFi project, decentralized finance, that launched on Solana on March 12th. So there's still innovation happening, people are still building, but just like with Ethereum's scalability update, these positive developments just weren't enough to overcome all the negative stuff that was going on.
So it sounds like it was a mixed bag for pretty much everyone, but Bitcoin definitely showed the most resilience. Now let's switch gears a little bit and look at some of the top weekly movers within the top 100 cryptocurrencies. One that caught my eye was Solana, which is a Solana-based token. It seems like it had a surprisingly good week.
It's funny, because while Solana itself was having a rough time, Solana, which is, it's basically a layer 2 solution for Solana, meaning it's built on top of the existing Solana blockchain, managed to stand out. Solana's goal is to make Solana faster and more efficient, which is a big deal, and it seems like people are excited about that potential. It was approaching a $26 million pre-sale milestone by March 15th. It just goes to show, even in an ecosystem that's facing challenges, there's still room for individual projects that are trying to solve those challenges to gain traction.
Innovation is always going to be key, right? Even when things get crazy. What about Cardano? I heard it had a little price jump, something to do with Trump.
Ah, yes, Cardano. Yeah, there was a brief moment where Cardano, also known as ADA, saw a little spike in price after Trump made some comments about crypto reserves. People got excited thinking, oh, is the U.S. government going to start buying a bunch of crypto? But then the details came out and it turned out that Trump was actually talking about using seized crypto assets, not buying new ones.
Ah, classic misinterpretation.
Happens all the time. And sentiment on platforms like X, it pretty much confirmed that Cardano ended the week either flat or maybe even down a little bit. It's a perfect example of how easily the market can get swayed by headlines and rumors and how important it is to wait for the full story before getting too excited.
Always got to read the fine print, right? Okay, last but not least, the meme king himself, Dogecoin. What happened there? Did the meme magic finally wear off?
Well, it seems like maybe the meme coin craze is starting to lose a little steam.
I know.
Dogecoin, DOGE, ended the week down about 6%. And this seems to be part of a bigger trend where meme coins in general are starting to retreat. Forbes actually had a pretty interesting article about this, suggesting that maybe investors are getting a little more cautious, a little more risk averse with all the uncertainty in the market right now.
Makes sense. When things get volatile, people tend to flock to the more established, less risky assets. Oh, and before we move on, what about XRP? It took a bit of a hit early in the week, but then it seemed to stabilize, right?
Exactly. XRP saw a 4.31% drop, down to around 2.50 by March 11th. Reports showed around $1.9 million flowing out of XRP investment products. But then, yeah, it managed to find its footing, at least for the rest of the week. Really benefited a little from that overall, even though it was partial market recovery.
Okay, so to quickly recap part one of our deep dive here, it was a wild week, right? A lot of ups and downs, mostly downs early on, but with some individual bright spots. It really highlighted just how interconnected the crypto market is with the global economy and how sensitive it is to news, whether it's about regulations or individual projects. But now, let's move on to part two, where we're going to dig deeper into some of the top headlines that shaped this week in crypto. We've already touched on a few of these, but I think it's worth going through them in a bit more detail. So top of the list, the EU approving that Bitcoin ETF. It definitely gave Bitcoin a boost, but what's the bigger picture here? Why is this such a big deal?
Okay, so this is where things get really interesting. The EU approving its first Bitcoin ETF, that happened on March 12th. It's not just about a quick price jump. This is about bringing Bitcoin into the mainstream financial world, like for real this time. It basically creates this regulated, familiar way for traditional investors across Europe to get involved with Bitcoin without having to deal with all the technical stuff like wallets and exchanges, which can be intimidating for some people. And the market's reaction, I mean, that 5% jump in Bitcoin's price right after the announcement, it showed just how excited people were.
So does this mean we could see Bitcoin ETFs popping up everywhere now?
It's definitely possible. Analysts are predicting that this could lead to more liquidity for Bitcoin, which is always a good thing, and it could potentially inspire other countries to follow suit. What's really important here is that it's a huge step towards legitimacy for Bitcoin and the crypto space in general. It shows that even governments and financial institutions are starting to realize that crypto is here to stay.
It's about time, right? Okay, next up. That massive crypto market crash and those huge liquidations that happened on March 11th, almost $318 million liquidated. That's an insane amount of money. I know we talked about some potential causes, but what's the biggest takeaway for you from this whole event?
You know, it really just highlights how much psychology plays a role in the crypto market. I mean, sure, you have the fundamentals, the technology, all that. But when you see a crash like that, it's a reminder that at the end of the day, it's all about what people believe, what they're feeling. Recession fears, whispers about potential tariffs, all of that uncertainty, it creates this fear that just spreads like wildfire, especially in a market that's known for being volatile. And those massive liquidations, they're like a magnifying glass on that fear. People get scared, they start selling, and it triggers these automatic sell-offs that just make the drop even worse. It's a chain reaction of panic.
Yeah, and I imagine those liquidations disproportionately affect those who are maybe over-leveraged or not as experienced with managing risk. It's a harsh
Yeah.
lesson to learn.
Absolutely. It's a reminder that risk management is crucial in this space. Things can change so quickly, and if you're not careful, you can get burned, even if you believe in the long-term potential of crypto.
Okay, moving on to headline number 3. A major decentralized exchange got hacked, and the attackers walked away with $100 million. It's got to be a huge setback for the DeFi space, right?
It's definitely a concern. This hack, which happened on March 11th and affected Ethereum, Solana, and a bunch of other tokens, it raises some big questions about security in the decentralized finance world. You know, DeFi has so much potential. It's all about creating these innovative financial services without relying on traditional banks and intermediaries. But incidents like this, they can really erode trust. And when trust is gone, people get scared. After the news broke, both ETH and SOL saw their prices dip, which tells you that the market was definitely shaken.
It's understandable, right? People want to feel like their money is safe, whether it's in a bank or in a DeFi protocol.
Yeah.
So what can be done to prevent these kinds of attacks in the future?
That's the big question, and I don't think there's an easy answer. The beauty of DeFi is that it's decentralized, but that also makes it harder to secure. There's no central authority to go after if something goes wrong. So it really comes down to developers creating more robust security measures and users being extra careful about which platforms they trust.
Due diligence is key, always. Okay, next headline. David Sachs, the new crypto czar, sold off a bunch of his crypto holdings. Did that move the market at all?
It's actually really interesting because even though he sold a significant amount, we're talking $200 million worth of Bitcoin, Ethereum, Solana, and even shares in companies like Coinbase and Robinhood, it didn't seem to have a direct impact on prices. The reason he gave for selling, which was to avoid conflicts of interest now that he's in this big regulatory role, it seems like the market accepted that explanation. Of course, there was the usual chatter on platforms like X, people debating the ethics of it all, but overall, it didn't really cause any major waves.
Okay, so not a market-moving event, but definitely something that people were paying attention to. The next headline on our list is the launch of that Ethereum scalability update, which we talked about earlier. We know the timing wasn't ideal, but looking beyond the immediate market reaction, what are some of the longer-term implications for our listeners? Why should they care about this update?
This update, it's all about making Ethereum faster and cheaper to use. It's about addressing some of the limitations that have been holding Ethereum back, those high gas fees and slower transaction speeds. And that's huge because, let's be honest, if Ethereum wants to stay competitive, if it wants to be the platform for the future of decentralized applications and all that, it needs to be able to handle a lot of transactions quickly and affordably. So even though it didn't cause a price spike, this update is a major step in the right direction. It's about laying the foundation for Ethereum's long-term growth and adoption.
So it's not just about the price today. It's about the potential tomorrow.
I like that. Okay, back to Solana now, and unfortunately, it's not good news. We talked about that meme coin scam involving Hayden Davis earlier. What's the bigger lesson here for our listeners?
The biggest takeaway is don't get caught up in the hype. Always do your research before you invest in any crypto, especially if it's a meme coin or something that promises huge returns. And be super wary of anything that seems too good to be true, like a meme coin where most of the supply is controlled by a small group of people. That's a recipe for disaster. This whole incident, it really hurt Solana's reputation, and it reminded everyone that the DeFi world, as exciting as it is, it's still the Wild West out there. There are risks, and there are people who will take advantage of those risks. So buyer beware, always.
Words to live by in the crypto world for sure. Okay, headline number 7. A report showed some pretty significant institutional outflows from crypto products. What does that mean for the market? Is it a sign that the big players are losing faith? Well, it's definitely something to pay attention to. The report showed that in the week ending March 10th, there were $876 million flowing out of crypto investment products. And most of that, like the vast majority, came from Bitcoin and Ethereum. So yeah, it does suggest that some institutional investors might be cooling on crypto, at least in the short term. Maybe they're taking profits. Maybe they're just getting a little nervous about all the volatility. It's hard to say for sure, but it definitely contributed to that early week downturn we saw.
But wasn't there a report that showed Solana actually had inflows?
Right. Solana actually bucked the trend with about $16 million flowing into Solana-based products, which is interesting considering everything else that was going on. But, 16 million is pretty small compared to 876 million, so it wasn't enough to turn the tide.
Okay, so overall, not a great sign for the market, but maybe a small glimmer of hope for Solana. Next up, some potentially good news on the regulatory front. A U.S. court ruled against the SEC in a case involving crypto. Could this be a turning point for the industry?
It's definitely a win for the crypto industry. Basically, what happened is a federal court said that a specific token wasn't a security, which means it's not subject to all the same regulations as stocks and bonds. And the court sided with the crypto firm against the SEC, which is a big deal.
Why is that such a big deal?
Because the SEC has been cracking down on crypto pretty hard lately, and this ruling could potentially set a precedent for other cases. It could mean that the SEC has less power to regulate certain types of crypto assets, which is something the industry has been pushing for. And the market reacted pretty positively, too. Right after the news came out, Bitcoin and a bunch of other tokens saw their prices jump by around 5%.
So less regulation, higher prices. I think I see a pattern here. Okay, 2 more headlines to go. The 9th one is about Trump's crypto reserve plan, which we touched on earlier.
Yeah.
It seemed like there was a lot of initial excitement, but then it fizzled out pretty quickly.
Yeah, that was a classic case of buy the rumor, sell the news. When Trump first mentioned this idea of a crypto reserve, people got all hyped up thinking that the U.S. government was going to start buying a ton of crypto. Assets like XRP, Solana, and Cardano, their prices all jumped. But then the details came out, and it turned out that this reserve was going to be funded by seized crypto assets, not by the government buying new crypto. And just like that, all that excitement disappeared, and those price gains evaporated.
No, the fickle nature of the crypto market. One little detail can change everything. Okay, last headline. The Singapore Exchange is going to start offering Bitcoin futures contracts. What does that mean, and is it a big deal?
So the Singapore Exchange, SGX, is a major financial exchange in Asia, and they announced that they're going to start offering Bitcoin futures contracts starting on March 17th. And this is actually a pretty significant development. It shows that crypto is becoming more mainstream, that even traditional financial institutions in Asia are embracing it. Now, it didn't have a huge impact on Bitcoin's price right away, but it's a sign of things to come. It could lead to more institutional investors getting involved in crypto in Asia, which could definitely boost the market.
Interesting. So a lot happened this week, huh? It's amazing how much can change in just 7 days in the crypto world.
It's wild, right? And I think the biggest takeaway is that it's all connected. The macro economy, regulations, technology, social media, it all plays a role in shaping the crypto market. And this week we saw all of those forces at play.
Absolutely. It was a roller coaster of emotions, price swings, and news headlines. And speaking of news headlines, we've only scratched the surface here. There's so much more happening in the crypto world, and it's changing every day.
Definitely. And that's what makes it so exciting, right? It's a constantly evolving landscape, and you never know what's going to happen next.
Exactly. So for all of you listening out there, we want to leave you with a question. What are you most excited about in the crypto space? What are you paying attention to? Because this is a journey, and we're all in it together.